You felt it, right? That feeling that the entire world of investing has just been completely flipped on its head? Well, you're not imagining it. The game has changed, big time. It's moved off the Wall Street trading floors and right into the palm of your hand. So let's dive into this brand new world and figure out the new rules for survival.
First, I want you to look at a number, 15.6 billion. That was the average number of shares traded every single day in the US back in March 2020. Now, to give you some perspective, just 1 year before that, the number was only 7 billion. That's not a small jump, that is a full-blown explosion in trading activity. The floodgates just burst open.
So you gotta ask, right? Who are all these new people suddenly jumping into the market? And maybe more importantly, what kind of world did they just step into? Because let me tell you, this is not your grandfather's stock market. The rules of the game are totally different now.
Okay, so let's start with the people, the ones actually behind this massive surge. We're not just talking about more of the same old investors. Nope. This is a true retail revolution, and it's being driven by a completely new type of trader who's changing everything from the ground up.
A big report from the International Organization of Securities Commissions, think of them as the global rulemakers for financial markets, paints a really clear picture. Today's new traders are way younger and much more diverse than ever. They often have lower incomes, smaller account balances, and a huge part of what gets them started is just how ridiculously easy it is to begin, even with a tiny amount of money. And this is a global thing. I mean, look at Hong Kong. Participation among university students there skyrocketed from just 2% to 18%. That's a huge shift.
So this new generation of traders has walked into a brand new playground, the digital arena. And it's a place that offers some incredible opportunities for sure, but it's also absolutely packed with hidden dangers.
Just think about the difference for a second. The old way of investing, it was slow, deliberate. You talked to financial advisors, you waited around for quarterly reports. Today's world, it's instant. It's all about social media, so-called finfluencers, and even memes driving decisions. Trading apps have turned it into a game, making everything feel frictionless and immediate.
But here's the catch with all that easy, frictionless access. When it's that easy to jump in, it's also incredibly easy to make a quick, emotional, badly thought-out decision. And those kinds of decisions can have really, really bad consequences.
And that brings us to the hidden traps. You know, some of these dangers are out there, lurking online, but one of the biggest threats might just be lurking inside your own mind.
So first, let's talk about an old-school scam that's gotten a brand new life online, the pump and dump. It's actually pretty simple. Scammers get on social media and create a ton of hype around a stock, usually with stuff that's totally false or misleading. That's the pump. Then, once the price is all jacked up, they dump all of their shares at once. The price crashes, and guess who's left holding the bag? Yeah, everybody who bought into the hype.
And listen, this isn't just something I'm saying. The global regulators are screaming about this. This quote right here from that same IOSCO report is a direct warning about these so-called gurus online. It's just a reminder. Just because somebody has 1 million followers, that doesn't mean their advice is good or even legal.
All right, so we've covered the scammers and the bad advice from the outside. But what if the biggest, most dangerous threat you'll ever face isn't a con artist at all? What if it's a built-in, universal glitch in the way our own brains are wired?
It's a concept called decision fatigue. A working paper from the National Bureau of Economic Research, a really big deal in the US, dug into this. Think about your brain's ability to make good choices like a muscle. All day long, you're looking at charts, you're making calls to buy or sell, and that muscle gets tired. It gets exhausted. And when it does, the quality of your decisions just tanks.
And there is hard data to back this up. Check out this chart from that study. It shows how accurate professional financial analysts are. See how they start the day off strong? High accuracy. But as the day goes on, look what happens. That accuracy drops a lot. They get tired, they get decision fatigue, and if it happens to the pros getting paid the big bucks, you better believe it can happen to you.
Okay, so the world is tricky, and our brains get tired. Sounds a little hopeless, right? Well, it's not. The secret is just knowing how to navigate this minefield. So let's talk about the toolkits, what the regulators are doing, and more importantly, what you can do for yourself.
So, on the big picture level, regulators like IOSCO are really trying to step up their game. They're getting more active online to warn people, they're keeping a close eye on what finfluencers are doing, they're using new tech to spot scams, and they're pushing hard for better investor education. They're basically trying to build a better defense system for the whole market.
But at the end of the day,
You are your own best line of defense. So what needs to be in your personal toolkit? Number 1, stop-loss orders. These are your safety net. It's an automatic command to sell if a stock hits a price you've already decided is your limit. It can save you from a disaster. 2, understand your risk-to-reward ratio. We'll touch on that in a sec. 3, diversify. It's the oldest advice in the book for a reason. Don't put all your eggs in one basket. 4, use a demo account. Seriously, it's like a flight simulator for trading. Play with fake money until you get the hang of things. And finally, number 5, and this is so important, be aware of your own decision fatigue. Know when you're tired, know when you're emotional, and have the discipline to just walk away.
Okay, let's quickly break down that risk-reward ratio, because this is a game changer. It's a really simple idea. Before you make a trade, you compare how much you could possibly make against how much you could possibly lose. A lot of smart traders won't even touch a trade unless the potential profit is at least double the potential loss. Having a simple rule like that can keep you out of so much trouble.
So, after all that, where does that leave us? What is the future of investing going to look like in this crazy new digital world? Well, the fact that huge, global organizations like IOSCO are putting together entire teams to tackle this, that tells you everything. This is not some passing fad. This is a permanent, fundamental shift in how finance works, and the folks at the very top are racing to keep up.
And what it all boils down to is this. Technology has made investing available to everyone. It knocked down the old walls and opened the doors for millions and millions of new people. But that incredible access, that incredible power, it comes with a whole new set of responsibilities that land right on your shoulders.
Which leaves us with one last tough question to ask ourselves. In this new world of one-click trades, nonstop social media hype, and information overload, is the biggest risk you face really out there in the market, or is it the person staring back at you in the mirror?